right, welcome back to Metro Morning Live. It is now 13 minutes past the hour. Please be careful out there. It is wet and raining, and it is election day, and we want you to get out and vote. The polls are open right now, and they close at 7 o'clock. Joining me now to talk finances and a segment we call You and Your Money is Jim Griffith of Griffith Financial Services. How you doing this morning, Jim?
I'm doing good this morning, Rob.
I know it's kind of wet out there, Jim.
I got a little wet this morning.
I want you to be safe out there now, Jim.
I will.
All right.
I'll make sure I don't hit those potholes.
Oh, yeah. Well, that's hard to do, Jim. Well, this morning, Jim, we're going to talk about living benefit life insurance.
Absolutely.
Okay, so exactly what is that?
Yeah, living benefit life insurance is life insurance that provides the owner with benefits that they can access while they're living. Most life insurance policies will just have a death benefit in many cases, but living benefit life insurance allows the owner to actually access cash to address issues while they're alive. So it's not just something that'll provide a benefit for your beneficiaries after you die.
When you look at older life policies, how do they work?
Yeah, older life insurance policies basically are going to pay, you pay the premium on the life insurance policy. When you die, the policy will pay a death benefit. In some cases, the policy may also accumulate cash value. And so, but they don't give the owner access to benefits while they're alive.
Now, how does life insurance for the living work, Jim?
Yeah, life insurance for the living basically pays the death benefit like old style policies do. But they also provide you with benefits such as protection for critical, chronic, and terminal illness. Critical illness would be like a heart attack, organ transplant, or a stroke, if you will. So if you have a situation like that that occurs, you can actually accelerate the death benefit and get cash to address those issues. A chronic illness would be something like not being able to perform 2 out of 6 of your activities of daily living. So that may be bathing, transference, basically moving from the bed to the wheelchair. You get money to address that chronic illness. And also it will give you money to access for a terminal illness if you're diagnosed by a doctor that you have less than 24 months to live.
All right. Well, when you talk about life insurance to protect the living, how does that work?
Well, basically, what it does is it provides you with the money so that you don't have to actually dip into your savings when you have a critical illness or a life event, if you will. About 70% of the people at some point in time will need access to money for a medical emergency or long-term care needs. So these medical and long-term care expenses are very devastating. So it's important as part of your life and retirement plan to have a policy that will give you access to that cash so you don't have to worry about dipping into your savings, spending that money down. That's your kind of your emergency fund, if you will, or actually dipping into your retirement plan. And that essentially will set you back when it comes to reaching that goal that you need to have the money to live a comfortable retirement. And believe it or not, most of the financial hardships that occur because of either a need for money to address long-term care issues or a need for money to address a life event, which is an unforeseen medical situation.
Wow. And Jim, how does having these living benefits help?
Yeah, having these benefits are really great because what they do is they protect your assets while you're alive, as I just mentioned. These new policies can be designed if their policy is accumulating cash value. They can be designed so that once that cash value is accumulated, that money is locked in and it can never be lost. Many people think that when you have a life insurance policy, you don't have any liquidity. Well, these newer policies on the market now actually will give you 20% liquidity after the first year compared to 10% access to the cash value if you're using an annuity. So they do give you liquidity. The other thing is that many of these policies, the newer policies will give you actual discount toward the mortality cost as you get older. As you get older, on a lot of policies, the premium will actually go up because you're having to pay more money toward the death benefit because you're getting older. Okay, the newer policies actually incentivize you with health and wellness incentives to either go to the doctor and get a checkup once every 2 years, maintain your weight, live a healthy lifestyle, maybe put down that rib and that chicken that you like so much, and basically live a healthy lifestyle and stay healthy.
All right.
You also get lower policy expenses, and it also, because you have those lower policy expenses, that helps to increase the internal rate of return in that policy if you're looking at accumulating cash down the road for retirement. So you can also design these policies to basically do whatever we want to do. It's like having a custom home. You can design the policy so that if you want to accumulate money for a child's college education, we consider that to be our child asset builder. We can use them for business owners, for key person policies, buy-sale agreements, and also design them so that you can have a retirement plan, access to money if you need it for any reason without any penalties or any tax situations being triggered, unlike a 401k plan, and also have that those living benefits for critical, chronic, and terminal illness.
Okay. And how can you find out if you have living benefits?
What you need to do is basically give us a call, and we will do a policy review for you. I'll do it myself, or one of our qualified agents will definitely take care of that for you. In that policy review, the things that we look at is we look to see that policy is in good standing. And what I mean by that is that the proper amount of premium is being paid to the policy so that the policy will not lapse. We also check to make sure that you've got those living benefits. And we also, in some cases, you may not need as much insurance as you have, so we can actually reduce the insurance, free up some money for you to invest towards your retirement, or in some cases, you might need more insurance. So it's very important and critical to get that annual policy review.
And what other benefits, Jim, do newer policies have?
Yeah, the newer policies have substantial benefits. I mean, everything from being able to accumulate cash value, pull that money out so that you can use that money for supplemental tax-free retirement income. These policies also have unique interest crediting strategies. A lot of the older policies will simply give you a fixed rate of return, or they will give you money when the board of directors declare a dividend. So if you're looking at building cash value, I would say one of the newer policies will probably do that in a much more efficient manner.
Now, are all life insurance policies the same?
No, they're not. Basically, you have a term policy, which is basically going to give you coverage for a period certain. That may be 10 years, 20 years, 30 years. And the term policies will not accumulate cash value. Then you have a whole life policy. Basically, that policy is going to give you a death benefit. In addition to that, it can be set up so that you can accumulate cash value in that. Then you have a universal life policy, which is basically a policy that you're paying money into. A portion of the premium goes to the death benefit, and another portion of the premium goes into the policy for you to accumulate cash value. Then you have a variable life insurance contract, which basically is a life insurance policy with sub-accounts in it, which are mutual funds. So the cash value is going to increase and decrease based upon stock market performance. You don't have that lock-in protection once you've earned that money like you do with, my favorite product is the Index Universal Life Policy.
Yes, sir. Now, Jim, how can people get a policy review?
Yeah, simply just pick up the phone and give us and contact us. You can get us on our website, which is griffithfinancialservices.com. We also have a mobile app. You can get in contact with us by texting GFS1 to 36260. You can also go to our Facebook page and go to Griffith Financial Services LLC, like our Facebook page, and just click that little blue button, send us an email. We'll get right in contact. We'll get right back with you and schedule a consultation. And you can always simply just pick up the phone and call us at 800-361-6542.
All right, Jim, great information as always. And, it is election day, so get out there and vote, Jim.
Got to go do that.
Yes, sir.
All right, Rob.
All right, good to see you. Be safe out there now, Jim.
Will do.
All right, we'll be back with more after the break.